Hi, it's Jake here. Welcome to The Voluntary Life. This episode is about investing, and specifically it's about investing in gold and silver for private individual investors and savers. I think investing in gold and silver is a really important and useful way of protecting your savings or investments against inflation and the dangers of inflation. I remember as a kid, this must have been late 70s, early 1980s, a conversation that made a really big impression on me, where I was talking to an old man who I'm guessing was in his 70s, and I think he was a caretaker or a porter of a building or something like that. And he was telling me about how he had retired many years before, but the value of his pension had been totally destroyed by inflation to the point where he couldn't afford to live off his pension anymore, and he had to go back to work, and that was why he had the job that he had. I'm guessing he must have had a fixed income pension, and he must have retired in the early 1970s, and then because the 1970s was a time of very significant inflation, he had then had the value of his life savings, his pension, eroded to the point where he had to go back to work. And it made a big impression on me at the time, because I remember thinking as a kid, how can that happen? How can it work that someone's, life savings can be sort of destroyed like that? And I think this is a relevant threat in all times, but particularly in our times, as we are now living in sort of the Great Depression since 2008, and since we're also living in a time where there has been massive increases in the supply of money by pretty much all Western governments. They call it quantitative easing, and there are lots of other words that are used for it, but essentially it's the printing of money, which is what leads to inflation. So I think this is relevant for anybody who is working towards creating as much financial freedom for themselves as they can, and who wants to save for the future. Investing in gold and silver is one way of protecting your savings from the threat of inflation. And this podcast is a discussion from myself and a group of friends, all of whom invest in precious metals to one extent or another. And we talk about some of the practicalities that we face as individual investors. And I think those practical issues will be faced by anybody who's interested in investing in gold and silver. So I hope that this is useful for you if you are currently thinking of or already investing. And there's a good book that is a good introduction called Guide to Investing in Gold and Silver by Mike Maloney, which we talk about during the discussion, and I'll put a link to that in the show notes. Everyone on this call is quite convinced of the value of investing in gold and silver in these times. And we have some debates on the call about different aspects of investing, but you may find it useful to seek out other views. There are other views on the subject. Some people believe that because the value of gold has been rising for 12 years now, that it's in a bubble and that now would be a terrible time to invest in precious metals. Pretty much everyone on the call thinks that although the value's been rising, there's a long way further for gold and silver to be revalued, given the amount of money printing that's going on at the moment. So obviously, nobody on the call is providing any kind of qualified financial advice of any type. None of us are registered financial advisors or brokers or dealers or securities dealers or anything like that. So this is just provided as opinion to help you formulate your own views about investment. And obviously, we're not responsible for what you do with your money. This is just for information purposes. So I hope that you find it useful and that it can form part of the many views that you take into account before making up your own mind about investing. And with that said, I hope you enjoy the discussion. Thank you so much for listening.
So I'm curious to, just to start off, to ask you guys, who on the call, who has gold at the moment? Is everyone here already, have they already invested in gold or thinking about it, or what stage are you guys at?
Already invested.
Cool.
Yeah, I'm also...
I'm all in.
That's interesting. So this is a gold members call.
Gold bugs.
A gold and silver.
Gold and silver too. Oh, that's
I'm actually in a gold mine right now.
you're currently panning.
I decided to skip the middleman, you know?
Invested or mining?
Just inhale that nice black dust there, Christoph. Enjoy.
Yeah, what is silicosis again?
Cool. Well, I've got a question for you guys then, because I mean, obviously, this whole discussion is like we're all investing in gold. I'm very heavily invested in gold as well, so I totally buy the importance of having gold, and also I see the probability of hyperinflation and of the rise in value of gold, a massive rise in the value of gold as being very high. But I want to ask you. What about gold and silver then? I mean, what are your strategies or experiences in holding gold versus silver? Do you have a particular ratio of your holdings that you have thought about? How did you decide to hold X gold and Y silver? Because I mean, me, I'm genuinely interested in this for myself because I have been investing in gold. I started in 2007. And gold is something I think is a very important part of my portfolio. I haven't yet really invested in silver. And interestingly, reading this book is one of the first times where, not as part of my main portfolio, but just purely as a speculation, I may invest in silver. But since you guys, are all sort of, precious metal interested people, what is your strategy for how much gold you have versus how much silver you have and why?
I initially was all gold too, and I moved into silver. I moved into the physical possession of silver primarily because, in the event of shit hitting the fan, I wanted something that I could barter with. There really was no type of I want a certain percentage of gold versus a certain percentage of silver in my precious metals account. It was more, I want to have some silver coins on hand in case shit hits the fan and I have to barter with someone to buy food or buy, some good of some kind.
Right. So this is really very much it's going to be easier for me to be having small units of silver walking around trying to get some food than trying to show someone a little lump of gold and get some food type of situation.
I was just going to say, I can't imagine walking around with American Gold Eagle is going to do me much good when I want to buy a sandwich.
Right.
That would have to be a really, really big sandwich.
Or you walk in with an American Eagle and you say, listen, I'm interested in sandwiches over the next maybe 6 months, a year.
Can you open up your book so I can make sure that you're going to be good and financially solvent 2 years from now, so I'm going to get my sandwich contract fulfilled?
Maybe if you want to buy the sandwich shop itself.
That's also an option. There's a Subway right by my apartment, so that could be the case.
Yeah, I read a book about the Weimar hyperinflation, and you're joking about it, but it's not that unrealistic. I mean, if it's going to be really bad, it makes sense to know a farmer.
Oh yeah, I completely agree.
I completely understand what you're saying. You want to have some silver so that you have something tangible to barter with. So you've got some silver. So now, as time goes on, how do you decide whether to buy more silver or more gold? I mean, is it just, do you have a strategy there, or how's it working out for you?
I wish I could tell you I had a strategy. I just, it's like, well, I bought some gold last time. Maybe I should buy some silver. It's like there isn't much in the way of like a major strategy.
Right.
When it comes to what I buy and when. It's just like, how much money do I have on hand? What's the price? I like round numbers too. My gold and silver investment strategy is unraveling before your very eyes. But it's like, well, let me round it off to a straight even number so I have enough,
Now, I tell you, anybody who's been investing in gold for as long as you have has got nothing to be ashamed of. That's for sure.
Yeah, when it comes to strategy and to where and when to buy, it's all guesswork, frankly.
Right.
So when I invest, I actually have a ratio in mind, and I find the argument about silver having more of an upswing than gold to be very persuasive in terms of the trends in industrial demand, the fact that there's so little silver available, both in terms of what's above ground and the fact that so much of the industrial consumption of silver is not recyclable, as opposed to gold doesn't have the investment. Doesn't have the industrial demand, or something like copper is extremely recyclable. So it's very different in that respect. The historical ratio between silver and gold is interesting to look at as well. And I also see the strongest case for market manipulation in the case of silver. I'm a little bit more skeptical about the manipulations in terms of gold, at least in this current decade.
So can I ask, just out of interest, what ratio of your own holdings you're trying to keep?
Yeah, so I aim for a 2-to-1 ratio in silver to gold, and the silver that I own, I try to physically possess in order to avoid counterparty risk. And then for gold, just because it's such an easy target for theft and that kind of thing. It's worth so much in such small quantities. I try to hold a little bit of gold, but also I have some in pool accounts as well, and I try to geographically diversify in terms of the pool accounts that I'm in.
That's cool. Yeah. With something like Bullion Vault or something like that.
Yeah, Bullion Vault. I have invested in their vault, which is in Switzerland. Yeah, because I feel like that's the most politically stable place in terms of respect for private property.
Yeah, I have gold sitting next to yours in that vault.
Very good. And also goldmoney.com, they have vaults in Hong Kong, which is another interesting place politically in terms of a good place to have vaults. The other vaults that I've seen are kind of like in the UK and I don't forget what the other place is, that maybe the US or something like that, but I'm a little bit more concerned about those kind of places in terms of confiscation. So
now, when you say 2-to-1, you're talking about current monetary value. So in other words, if you see your silver spike in value massively, and next time you go to add to your holdings, will you then say, I'm now going to invest in gold because the silver spike is that what you're talking about?
Yeah, exactly. In terms of US dollars,
right.
That's just happens to be the standard, and that's kind of arbitrary. It's just because I live and use US currency all the time. But I mean, if I saw a silver spike, really heavily relative to gold, then I would either decide to balance things out, or I might re-examine the ratio that I'm using, and that really depends on my opinion on where I expect the trend to be from there. If I feel like it's corrected about as much as it's going to correct, then at that point I'm going to be investing more in gold. If I expect it to continue in that direction, then maybe it will be more of a ratio 3-to-1 or 4-to-1 or whatever.
And you're holding twice as much value in silver as gold, is that right?
Yeah.
Right. Cool. Thank you so much for sharing that. It's very interesting to hear your thoughts behind how you've approached it.
I also, just to add one more thing in there for silver, I think that since I'm persuaded by all these arguments about where it's going to go compared to gold, it's extremely cheap right now compared to gold, if those expectations are accurate. And so part of my bias of buying more silver right now is that I want to take advantage of that cheapness as much as possible.
Yes. Yeah.
While it's good, I basically feel like the government and the stock markets and JP Morgan and all these people are putting silver on sale for me right now, and so I want to take opportunity of the sale.
Yeah, cool. Yeah, I thought that was a very interesting argument in this book about the historical imbalance in silver to gold price, and so yeah, that's really interesting, and I do find that argument quite persuasive as well. It's a very interesting one.
Yeah, I'm also about two parts in silver and one part in gold.
Right.
And my reasoning is not so different from I think Christoph is his name.
Yes.
Yeah. And but I would add that for me, I think also silver has more potential in price appreciation. But for me, it's because it's more than 50% used for economic purposes. It's dependent on how the world economy does, and I think when a financial collapse happens, it will affect the workings of the productive sector, the economy, and I think then will the request for silver will go down, and the investment what's the word request no
demand
yeah. The investment demand will go up, and it's not so clear for me whether this will be canceling each other out,
right,
or the investment demand will outgrow this falling demand on the economic side. So it's not so clear cut. So it's very attractive in I think because it will go up, but in the very end it's difficult to see when the peak will be there. So that's a reservation I have.
Right.
Silver, and for gold.
But sorry to interrupt, but just despite that reservation, you still feel that it's worth having twice as much silver as gold, so to speak.
Yes, because that reservation is only valid in the very end, and I don't think we're close to the very end.
Right.
I think it's still some years, so I'm very calm having a lot of silver. And I first bought only silver, and then after a while I thought maybe they will come overnight to a gold standard, and then of course gold will appreciate very much and maybe more than silver. And so I thought, okay, maybe it's not bad to have some gold at least, and it's also not as volatile, and that's also good in explaining it to my wife what I'm doing with all. Yeah, I mean it's not. I'm not on my own here, and it's all hard-earned money.
Yeah, when you have to come downstairs in the morning and see the papers or go online and say, honey, remember what I told you we have in the bank yesterday? It's changed.
Yeah, and I went through the stock market crash in 2007 or 2008 it was, and we lost about 45% of our value.
Oh man!
We were in vacation, and I just saw the headlines, and I was not interested in my finances. I just put the money there and let it sit there, and luckily I did that. Continue, and in 2010 I had regained all the value. So I lost only 3 years of inflation, but I had the nominal value back without doing anything. So it saved me a lot of stress, but I knew that I was not able to manage the money, and so this time I did wanted to do it better, and I think I do now. But that's still the argument to avoid or to cap the volatility a bit.
Yeah, absolutely. No, and also it's easier to sleep, I think, when there's less volatility, because it certainly can be a bit of an adrenaline rush when things change so drastically.
Yeah, but I mean, I'm in the first year of precious metal investing, so I still have to. It's easy for me to lose money when the bubble pops, but there is no bubble. But yeah. But I experienced the crash in silver in April, I think it was, where it was shortly under $50 per ounce, and I had this. I experienced the crash in gold when it was shortly below $1,900 dollars, and in both cases I foresaw that because the metals were trading way above the 200-day moving averages, and I swapped my gold for my silver, or I swapped my silver for my gold.
Oh, that's fascinating.
Yeah. I mean, I was very lucky because I'm not always looking at the screen and not every day. But I mean, it ran for a while, and you could see it if you were informed. Yeah, it's possible. I mean, it's difficult to do that, but yeah, silver and gold are not trading always in line with in lockstep with each other. So you can take opportunity of that. But it will not always work, of course.
Were you able to do that because it was you're using some kind of online account, or talking about physical bullion, or?
Oh, that was on Bullion Vault.
Well, you've got your gold sitting next to ours then in Switzerland, presumably.
Yeah.
Our gold is all having a party.
Yeah, but I have some coins, of course, in reach, and also for the reason to in case of an emergency to be able to barter. So I have 1 ounce silver coins, and that will be lasting for several months to buy food. But I have also some gold coins, but that was just because I was not really well informed. Because I mean, you need in Europe you don't need to pay taxes on gold coins, and so I first bought gold coins. But I don't think it's a good idea to have gold coins around. It's not
for the same reason that they're not really going to be useful for small transactions. You mean?
Yes, and it's difficult to get rid of them. I mean, if you want to sell them on eBay, you have to pay a lot of commission, and it's difficult, and you have to insure them and send them, and it's a risk, and it's a hassle. So I regret that.
Yeah. I was interested to see that both Christoph and Heike were both about twice as much silver as gold. And what did you say that yours was at the moment? Like, what kind of ratio do you have at the moment?
I just pulled it up while everyone was talking about it, and I'm 3-to-1 gold to silver.
Interesting.
Because initially I put everything in gold, and I mean I was aware that silver was far more volatile, and I don't know to what degree that, in hindsight, that really influenced my decision. Silver is almost like an afterthought to me, like gold, the gold standard. This is what everyone's talking about.
Well, that's pretty much where I'm at, because I'm like 99.9% gold to silver. I've just because I just seen I can actually buy it on Bullion Vault as well. I just bought a little bit of silver, but it's negligible. Sure. So yeah, I very much came from a background of reading about gold's role, and I'm very interested in silver. Following this discussion, it's really helpful for me to hear the experience of you guys. I wanted to ask you also. This should be interesting for me. I think some of you know that I have a permanent portfolio, so I'm following the kind of Harry Browne idea, which basically means that I have 25% of my investments in gold. And so of my total portfolio, I have 25% in gold. It's not entirely true because I also have some other investments as well, but that's the chunk of my basic portfolio. And I was interested to ask, I think Mike is pretty much...
I'm all in, baby.
All in, yeah. You're Mr. Precious Metals. You're like 100%, right?
Pretty much, yeah.
So I wanted to ask you guys, what percentage of your portfolios are precious metals?
Yeah, I'm also very much all in. I still have a life insurance, which I'm not sure if that's a good investment. So I'm thinking about selling that with a big loss, but that's a different story. And I have some cash, of course.
Yeah.
If the car breaks down or so, then I don't have to sell when a correction is.
Yes.
But it's not so much. We had just a very expensive engine repair, so that's drawn down. But
so are you talking like 10% cash, or like what would you say? Just approximately, what do you? Because I hold quite a lot of cash. I'm actually 25% cash. But what is your cash ratio?
Yeah, I mean you do it for investment reason because it's part of the permanent portfolio. But I just want to be liquid and for expensive bills.
Yeah.
But it's actually maybe about a 10% only.
10%, right?
10%. Right. Yeah, it may be maybe 10 or 8%. Yeah.
Yeah. Cool. That's very interesting. Very interesting. How about you, Christoph?
So I have some cash. I try to keep it lowish, just enough to make sure that if I have, a medical emergency or something, I can pay the bills right away. Other than that, I'm in precious metals. At some point, once I sort of hit my goals for bullion, I'm interested in leveraging with mining stocks, which are still precious metals, but a little bit different than the bullion kind of stuff.
Yeah, sure.
I'm always curious about things like I can't imagine intentionally investing in cash at this point. I do follow the news around the foreign exchange and stuff and so forth, and I'm not short enough term trader to put anything in cash.
So you pretty much also, like Heiko and Mike, you're pretty much more or less like 90% precious and then maybe some cash. Is that right? Or
Right.
I'm interested in investing, as well as my permanent portfolio, investing additionally a bit more in precious metals, just because I do believe that I've already got precious metals in the permanent portfolio to protect me in the event of the shit hitting the fan, but I hold that probability to be so high that I'm essentially speculating more. I want to speculate more of my portfolio on that actually taking place.
Yeah, the idea of you having 25% in cash, when you said that, Jake, I always shudder. I just there's something that makes me very uncomfortable about that.
Well, you say that, but the interesting thing is that it's helped me a couple of times because as Heiko said, he lost a lot of value in his stocks, and then they recovered over that period of time, right? I lost value in my stocks too, and because they fell as a proportion of my portfolio, I then invested at the bottom, and I got to ride the wave up again as they recovered a bit. They didn't, it's not like a boom in stocks, but just that little recovery after 2008, I actually did pretty well out of that. And that was possible because I had cash on hand to take advantage of rebalancing opportunities,
I think that's consistent with Mike Maloney's approach to a large extent as well, because he's all about the cycles, and he said in the book that in the long run he doesn't care about gold. He wants to get into property, right, housing and whatnot. And it sounds like you're doing that just on a shorter scale than he is.
Absolutely. I mean, this is the funny thing, is that there's a chapter in this book where he talks about a family. He gives this allegory of what if there was this family, one of whom invested in the stock market and another of whom had a balanced portfolio between stocks and gold, where whenever it became overvalued between stocks and gold, they would switch out into the other asset class over the 20th century. Now, it's very interesting that he didn't choose to pit a stocks-only person against a gold-only person. He chose to pit a stocks-only against a stocks and gold, right? So he already has hedging strategy or a balanced portfolio in there. In that concept is in there in his idea of how you take advantage of the rise of different bubbles and ride the waves up and sell at the top and so forth. And so, like, the interesting thing for me is that those are the two kind of linchpins of the permanent portfolio: the gold and the stocks. The cash is really there because in a recession, cash is actually especially a tight money recession, whether we'll ever get one again, but in a tight money recession, cash is the only thing that would actually hold value. And the bonds are there because in a depression type environment, like the 1930s, that's the one asset class that did well. In a sense, the permanent portfolio is a slightly more sophisticated version of what Mike Maloney's talking about in that chapter.
Yeah, I hadn't noticed that, but it's interesting that you point that out. I mean, it's not exactly a fair fight of stocks versus stocks and gold. I mean,
yeah.
I'm curious about when to get out. That's
of gold.
Yeah, like in the long term.
Yeah.
As also Mike Maloney said that he's not in gold. Like, it doesn't rise forever. Like, this is not. Maybe people are saying that, but we know also that the property market didn't rise until the end of the world.
Yeah. Well, this is that is a very good question, because and it sort of ties back to what I was just talking about, because the permanent portfolio, the interesting thing about it is that you automatically sell your most highly valued assets when they're most highly valued, because you rebalance when they get, when anything gets to become 35% of your total holding, you rebalance it down to 25%. I would be really interested to know what you guys think about, when are you going to sell your gold? And because if you don't have a portfolio balancing strategy like that, then you have to make a conscious decision, like, now I feel is the right time. So how will you guys know when to sell your gold?
When everybody up and down the street is talking about gold and silver and precious metal investment, I'll know the bubble is at its peak, and that will be time to sell and buy my dream house somewhere.
Right.
That's kind of my unscientific approach, because when you see it on the news constantly, and they're constantly mentioning the gold price, and everyone's talking about it, that's the height.
Right. Right. Yeah, I did actually think that was a very nice comment in his book, that he sort of says a similar thing, that in the 1970s there were queues around the block to buy gold. And when I think he even says, when you see those queues, that's when the time to sell.
Yep.
Right now, it seems like, people keep saying that they think there's a gold bubble right now, but when I look at the stores that are around me where I live, it's mostly like, sell us your gold jewelry for way under spot price, because you don't know anything about, financial stuff.
Yeah. Yeah, there are a few people wising up, which is why those shops they're springing up everywhere. They spring up here as well, those shops. But yeah, it's not the case. He makes another nice point in the book, which is like, just think about how many people in your town own gold. And it's
what is it? 1 to 10,000 or 1 to 5,000?
Yeah. Is that also?
That is fascinating to think about.
Yeah, it's absolutely fascinating. Does kind of mean that you maybe have to keep your finger on the pulse a little bit, because I don't read any financial media, so maybe I'm going to have to watch it to decide when to sell. So when are you going to sell?
Well, I definitely do want to keep my pulse on what percentage of the populace is investing in it.
Yeah.
And then other than that, I'll be looking at all of the trends that I think are going to cause an upswing in prices. If they come about, if they come to fruition, and I see them topping off, then I'll consider selling. If the U.S. goes back on a gold standard, that might be a indication to me that it's time to sell gold. If someone invents a new metal alloy that completely replaces silver, then one of my strong incentives for investing in silver is the industrial application. So if it gets replaced industrially, then that would be a concern as well. So I sort of want to keep track of all of those different things.
Yeah.
I would look also on the number of ounces I need to pay for a median priced house. That's one measure.
Yes, absolutely. The price of things in gold, the real things.
Yeah, or silver. So if that's if that's becoming real cheap, and I have the impression that housing prices are not gonna fall, then investment in real estate will become interesting for me.
So your ultimate end game is to get out into real estate, you think? Is that where you will go?
Yeah, that way. Yeah, that would be one way to go, because that would be a place to live. I mean, I'm renting for now, and I have no capital for buying a house. And if that's achievable for me, I would be considering myself lucky, because I can use this property.
Yeah, sure.
And that brings up a question that I wanted to ask other people, which is at one point in the book, Mike Maloney says, stop thinking about gold in terms of its dollar price. Think about it in terms of the amount of stuff that you can buy with it. And then he doesn't give you any suggestion for how to go about measuring that. And so I was wondering, what do people, if people think that's a valid idea, and if so, what kind of measurements would they use to try to gauge that? I guess, real estate prices would be one of those.
I think he suggests also the median priced house to gold ratio, and as well the Dow Jones to gold ratio.
Yeah.
Maybe some others as well. I don't know.
I think the median priced house to gold is absolutely fascinating. It's really interesting to see, and it sort of makes it a lot more tangible for me as well. What's going on in the world when you kind of think, when you can understand how much gold you need to buy a house or something tangible like that. It really sort of puts in perspective what's happening in the economy. So yeah, I thought that was
is the idea there that is he saying, okay, so when you sell your gold, you can buy a bunch of median priced houses and then rent them out?
Yes, exactly. That's what Heiko's talking about, buying one just to live in, but he says his ultimate aim is to buy a bunch of rental properties, and I think that's partly because he's in with Robert Kiyosaki, who's really into real estate and thinks real estate investing is super duper. So I think that's partly maybe why that's tagged onto this book, because it's part of the Rich Dad series.
Oh, right. I want to investigate real estate investment some more, because when I think about that, I'm like, I don't want to become a landlord for a bunch of people. Like, that's not what my investment goal is. Dealing with leaky sinks and trash disposals all the time. So.
I think it's not an investment in the same way that gold, stocks, bonds, these kinds of things are an investment. It's actually a business. If you go into becoming a landlord, it is a business. Real estate, I think you really need to understand that business and know your way around it. And if you don't, then if you go in as an amateur, I think it's you can really get burned, because other people know the market better than you and so forth. So I agree with Harry Browne that real estate isn't really an investment in the same way as other asset classes. However, I think it is a great thing to have a house and be able to live in it, and I totally understand where you're coming from, Heiko. But yeah, as an investment, I don't really want to own houses and rent them out, because that's a business. And I mean, if I was going to go into entrepreneurship and do something, that wouldn't be the first thing that would come to mind as being like an exciting venture for me to go into, where I felt like I had natural advantages. So why do I think I would be a particularly good real estate investor or landlord? So yeah, I can see where you're coming from.
Jake, I think from my experience of landlords, you're just way too nice to be a landlord.
But I think there are possibilities in investing in real estate without having to be a landlord. I mean, closed funds or something like that. So I think that would be possible if you think real estate is totally undervalued and nobody's looking at it because everybody got burned in the housing bubble. And I mean, sometimes there will be a housing bubble again, and so.
Yes,
it's good to be in it before it happens.
Yes, REITs and so forth, real estate investment trusts, and these kinds of things. Yeah, that's all possible. But I think a lot of people, and indeed the Rich Dad book series, is about buying properties to get rental income because they cash flow and because you can get income from it. And those books, although I really like Robert Kiyosaki, I think he's a really bright guy, but those books that he wrote in the 90s feel to me more like 90s books when real estate was going, when we were in a slightly different world in terms of what the economy was like, right? And almost anyone could get into real estate and see the value rise, and you really didn't need to know the market. Like, any idiot could buy a house and watch the value rise, if you see what I mean.
Mm-hmm. And many did.
Yes, and many did, yeah. And then watched it plummet at the end.
I'm still stuck with the thought of wanting Jake as my landlord, though.
Hi, Michael. This is Jake. Where's my goddamn money, friend?
Jake, can we reenact the phone call where you threatened to break my kneecaps or something?
Yeah. So I obviously I'm not in the landlord business for good reasons, because I wouldn't be able to go and threaten with menacing looks. Awesome. Well, I really appreciated getting your perspective, guys. It's very helpful. It's nice to have real precious metal enthusiasts on the phone who've actually committed to it and are living it, because it really helps me to see a different perspective on things. I value investing in gold very much, and it's a very important part of my strategy, but I haven't yet invested in silver, and certainly the conversation and reading the book's given me a huge amount to think about, so it's been really helpful. So thank you so much for coming along.
Yeah, it was a great conversation, guys. It was fun to dip back into this world of financial information, which I've kind of stayed away from for the last little bit. So
yeah, thanks for chatting, and we have to keep our eyes open, because when enthusiasts get together, are likely to end up just boosting the same views, like gold, gold, and like
yeah, we it would have been good to have some skeptics on, but there you go. I think we do have to be careful that things like the times when gold falls in value and things like that. I think we need to have a perspective where we can understand those things, because otherwise you can get a bit wrapped up in the sort of gold boosterism, for want of a better word.
I think people take on the gold bug thing as an identity a lot of times too.
Yeah.
Which definitely something I don't want to do.
Yeah. I mean, once you've tried to roll around in your gold coins once, you just don't want to do it again. Really, it's not very comfortable.
You want to warm them up first. The cold metal against your skin, you don't.
Words from a pro.
I recommend baby oil.
Baby oil.
See, one of these days I'm going to have my Scrooge McDuck money bin, and I'm going to be able to do that swan dive right into a pile of gold coins.
Yeah. In fact, just before, when the crisis does hit, just before you sell all your gold, you do have to lay it all out, in a bath or on the bed or something, and then roll around in it.
Life is
I think my fiance might leave me.
Duck world.
Awesome. Well, it's been great fun talking to you guys. I hope you have a lovely rest of weekend, and look forward to talking to you soon.
All right, bye everybody.
Thanks, Jake. Take care.
Thanks for chatting.
Really enjoyable chat.
Thanks. Cheers, guys.